Good morning. I'm Pete Najarian. This is The Take for Market Rebellion. I'll tell you, what an interesting week we've had. Now, the theme of the week, huge gains early, sustain those gains throughout most of the session. And then, in the last 2 hours, 1 hour, 45 minutes, 35 minutes of the trading session, give back a lot of those gains. Yesterday was no different. We were up about 300 points early on. We rallied. We were up well over 400 points later into the session, only to give back most of those gains late again. And we finished up in the Dow, still a pretty strong day, 210 points to the upside. Nobody's going to complain about that. S&P 500 also participating. NASDAQ also participating. But the theme of the week just continues to play out. Will that play out today? I'll give you a little teaser. Right now, we're looking like we're up about 350 points. So we're looking very similar to what we've seen throughout the week so far as that's all played out. But yesterday, it was really energy that was starting to power the markets. And why? Because of the price of oil. Forget about all that craziness with the May contract. If oil's moved from 14 up to 26, which yesterday it was up and over 26, that's a pretty powerful move. And I'll give you a great example of something that's been participating along the way, Chevron. Chevron was $75 a month ago, now trading 93.5. So that gives you a pretty nice idea of what a big move that we've had in the energy space, and some of those are participating. As a matter of fact, you're probably seeing some short covering there in the energy space as well. Not necessarily in Chevron or Exxon or some of those big names, but the next tier of names, maybe in the OIH when you're looking around and you see some of these dramatic percentage moves. I think a lot of that might be tied to not just the fact that they do have great companies. I'm not discounting that, but there's a lot of short covering going on because of the concerns in the energy space. Now, other than energy, we also had the financials that were really powering the markets yesterday. You had a lot of the fintech type names. You had Visa, you had PayPal. PayPal had that amazing run into the earnings and post earnings, and that was really fueling a lot of what we were seeing in the financials. But also look at JP Morgan moving to the upside pretty strong. We had a nice participation from the financials and a nice leadership role that the financials had yesterday. Now the industrials, it seems like there's two names that dominate each and every day, and that's Dow Chemical, the former Dow Chemical, and Boeing. And it just seems like if those two names are moving to the upside, boy, the industrial space is going up. If they're going down, wow, the industrials are getting pulled down. Well, yesterday they were getting pulled up, and those two names were definitely powering that. Now, the tech space, that's been pretty common. We've watched that play out time and time again. It's Apple, it's Micron, it's names like Zoom, it's NVIDIA, those kind of names really powering the NASDAQ and the tech space, absolutely. So that's something that's been pretty interesting. Now, going into today, everybody kind of holding their breath. They want to know what's going to happen with these unemployment numbers. How is it really going to look? And some of the expectations were just built in to be astronomically bad, 22 million. Well, the number did come in for April. The unemployment report lost 20.5 million. It's a terrible number. We all understand that. It's an awful number, but not as bad as the number may be anticipated. So that's one aspect of this whole thing. And then you talk about this percentage side of things. And coming in at 14.7% of the employment rate, that's better than the 16% they were looking for. So again, not a great number, but maybe a little bit better than the awful numbers that were anticipated. And just to give you a little idea, that 14.7%, they said that there's even a possibility of a 5% that could go either way, and it all has to do with the data and how it's compiled and all this. Let's just stick with the numbers that we have been given, though, which is 14.7 now. In the Depression times, the levels are estimated to be around 25%. So fortunately, we're well below that. And we'll have to see how we're able to come out of this, how fast. And that's, I think, why the reaction isn't as negative as one might expect, because we're starting to see things open up globally. We're starting to see things open up within the states themselves. We're talking about a lot of different states, not necessarily wide open, full bore, but opening up. And we'll see how economically that plays out. And there is some bullishness, some excitement about how that may play out. And if indeed that's correct, obviously we'll continue to watch how this market can rally off of these incredible levels and those jobs. How many are really going to be coming back? And that's a debatable topic as well, because a lot of people are talking about the new world, but we'll have to deal with that as that comes. Now, Some really interesting moves yesterday, some really interesting moves today. You look at energy early on today, and I brought that up about yesterday. It's up 2.25% again today. And the price of oil hardly moving. As a matter of fact, somewhere in the 24, 25, somewhere in that sort of range. But Chevron again, this name, I talked about it. It was a $75 stock yesterday, 93.5. Today it's trading a little over 95. So some nice moves. Utilities participating as well today to the upside. Industrials again. It's Raytheon. They just had earnings just the other day. You have Dow, you've got Boeing, you've got Caterpillar, all up over 2%. So there's a lot of participation. And then even maybe slide over some of the names that you wouldn't expect. And this is a name that it was a big hot topic the other day on Wednesday when I was on the halftime report at CNBC talking about Disney. Boy, everybody was negative on that name. It was terrible. I can't help but think the stock was a $150 stock earlier in the year. Understandably, down to a $100 stock. But that $50 needs to be priced in for something about what's been going on. And that was my contention. And that's why when so many others were talking about it in such a bearish tone, I think a lot of the bearish side of Disney is priced in. Well, today we're trading about 108, and we even had some upside call buying in Disney today. So it might not be necessarily over as so many were implying the other day. And I, as a holder of Disney, can tell you, and put my money where my mouth is, continue to hold this name. And I still think, yeah, that $50, a lot of that is priced in terms of the parks. But let's not forget, Shanghai, they're going to start opening the parks. And when you look over into the European world, there's different parts of the world that are going to start up a lot faster than we are. And what does that look like? We don't know yet, but that's all part of the puzzle that we're all trying to piece together each and every day, right? I mean, that's the difficulty. By the way, consumer discretionary. Now, there's so many different parts of that when you say that word, there's so many different, but I'm going to just go here. My son and I have been doing boots on the ground for a long time now, since we got into this whole deal. And the idea is something that I've been doing for probably the 30 years or so that I've been in the stock market. Boots on the ground, all that really is when you go places, what is it you're seeing? How are things going? Are you talking to managers? I do a lot of that. I've done a lot of that. And my son and I have been going out each and every week, a couple times a week, and doing boots on the ground. We've made a couple of different trips over to the Home Depots and the Costcos and the Lowe's and all the rest of it. We've been saying, wow, parking lots are pretty full, pretty active. People are very safe. They're wearing their masks. They're socially distancing. They're allowing people in, only a certain number of people within the stores, all the rest of that. Obviously, with Home Depot, you got a lot of exterior as well. So a lot of this we've seen. We've been watching this sector, this segment, I should say, continue to just sort of power through, and online presence, which has become a bigger deal long before the coronavirus, but that's been part of this as well. So we've been watching this play out. Well, I can tell you, those names are performing very, very nicely. Home Depot has had an incredible recovery off the lows, and they just continue each and every time that I've gone over there. And I go over there 2-3 times a week these days just to check things out. Costco as well. They are active. They are busy. And I don't know necessarily. I've talked to managers. They talk about the busyness, but it's obviously off of what would be normal. But it's much better than a lot of the other places that are completely shut down and not able to service people the way they normally would either. So that's something to be said about that specific space in the consumer discretionary. Now, yesterday we talked about Pinterest, unusual option activity. And we saw that. And we saw the May 18.5 calls. They were trading about 70 cents. Stock took a nice jump to the upside today, well through the 19s, up into the 19.5 range. These have now more than doubled. They were up to about $1.40. You can't expect that to happen all the time. We talked about Twilio the other day. Can't expect that to happen all that often either. But sure is nice when these things do play out fairly fast. And we've been talking about the duration of trades has been very, very short. Very, very short. We talked about Netflix on Wednesday on some options that were going to expire today. Those I am out of because, first of all, it's Friday. They're going to expire today anyway. Second of all, they made a pretty daggone nice move to the upside. So it's a double-double. That's a win. Now, today, what do we have? We have Twitter. We got 2 buys in Twitter today. It's the May 29th expiring, so the final week in May. So it gives you a little bit of time, not a heck of a lot of time. Again, short term, but a little bit of time. We got the 33 strike calls and the 35 strike calls being bought. 50 cents for one, 15 cents for the other, about 6,000 of each. Stocks trading around 29.30. So these are both well out of the money calls, but this is an interesting name, a very intriguing name when we talk about Twitter, because a lot of the other social media companies have had a pretty nice reaction and have moved fairly nicely to the upside. Twitter's a little bit lagging. So will that finally start to make up? We'll see. Very inexpensive. I like the risk return levels of these kinds of trades. This one, once again, fits into that sort of an area. So I like this name. Doesn't mean it's going to work. Might go flat, might go down. Either way, stock could go to zero. But it's an opportunity, and that's what we're seeing here. This is some of the stuff that you really do learn. You understand, you educate yourself a little bit, but also we have great educators at Market Rebellion, so never forget about that. We love the guys and gals that we've got, do an outstanding job. You've got to understand the world of derivatives because of the growth. Now, we did pick up a little bit yesterday in volume. This has started out, it's interesting. Back on Friday, that was a monster day, nearly 30 million contracts. Monday, Tuesday, Wednesday, Thursday, or actually Monday, Tuesday, Wednesday, not so great. Thursday, a little bit of a comeback, something over 24 million yesterday. So we'll see how the volumes play out today. It is a Friday. It's sunny here. If it's sunny everywhere else, we might not see those volumes get as strong as we might like to see them, but at least we're kind of closing in now on the weekend. Folks, have a great night. Have a great trade. Have a great day. Have a great weekend.